What's up, everybody? Welcome back to the channel. Wanted to go over some really cool topic today. If we're in the crypto space and we're thinking about how we can create money and we can create wealth for ourselves, it's important to really just understand money in general. So I have a really cool article that I ran across on CoinDesk. It's a few weeks old at this point, but it's an interesting topic. And they discuss, well, the future of money. And they have 20 predictions by some leading industry analysts and folks that are in the crypto space. So I thought I'd share that with you. Because if you're in this and you're coming by my channel, you're probably interested, maybe newer to crypto, and you want to know, well, where is the space as a whole going? So it's really good to look at crypto. I know we talk about this in some other videos. I want to look at things from just a holistic point of view, just all around general frame of mind. So this is what, just good to see different things. So the first prediction here is that whatever the future of money holds, it will not be boring. So the first prediction is that stablecoins will replace dollarization. In the old days, countries whose currency collapsed would dollarize. They'd import dollar bills and start using that as money. 10 years from now, that will be a relic, according to Hasib Qureshi, managing partner at Dragonfly Capital. Countries will dollarize using permissionless stablecoins, and central banks around the world will ultimately fear crypto dollarization as a check against runaway inflation. I think that's already happening. People are seeing that our inflation is going through the roof. Latest CPI data today, 6.8%. So, and that's the CPI data. So that doesn't even include other higher priced things like energy and things like that. It's all select. They've tailored the results over the years to I think hide true numbers, but regardless, 6.8% already happening. Cryptos are going, definitely taking over as hedges against inflation. Second opinion here, crypto and fiat will coexist. Crypto and top fiat currencies continue to coexist, according to Hasu, which is a research collaborator at Paradigm. We might see a consolidation in smaller national currencies as people find it easier to access US dollars via public blockchains. That's an interesting one. Well, here's the next one. Everyone becomes a programmer. Digital objects are becoming as commonplace as emails, and programming literacy is akin to reading literacy. I expect in the coming years, people will be creating hundreds of tokens a year, all of which will have price discovery, be tradable, and have multiple financial attributes. Similarly, being able to write, read, and interact with smart contracts that make this possible will be a skill that increasingly more people have to participate in the economy. That is an interesting idea. Is basically they're saying if you understand how some of these programming languages work, and if you can interact with different blockchains and hash graphs, even if you just understand it, right, and you can pay someone else to develop the code for you, you're now going to open up many new avenues to participate in this new economy. This really, crypto is just revolutionizing and disrupting even how we perceive value and value money. Like, what is money? How do we even control that? So that's an interesting frame of mind, is that if you're wanting to know how you can take advantage of the changing economy, well, learn about these programs. Even just understanding how they work. So obviously you're watching this video, you're smarter than most people here, but I think it's cool. He wraps up and says, and this is Lex Sokolin, the head economist and co-head of DeFi fintech group Consensus, definitely tied into Ethereum there. So, you know, if they're saying, if the head economist tied in with Consensus is saying something, I'm going to listen to them, because Ethereum is one of the biggest cryptos on the face of the planet right now. The world also adopts the DeFi matrix. The DeFi matrix may be to the 2020s what the social graph was to the 2010s. Once every asset can be represented in a digital wallet, Bitcoin and Ethereum, yes, but also CBDCs, which are central bank digital currencies. You're going to see that word more and more. Stocks, loans, bonds, etc. All these billions of assets will trade against each other every second of every day around the world. This table of pairwise trades is what I call the DeFi matrix. So some of the cells, and he shares a graph here. I don't have it pulled up in front of me, but essentially all financial markets can be reduced to sub-matrices of the DeFi matrix. They're just comparing different currency pairs together. So that's interesting. The traditional stock market will be central bank digital currencies versus crypto equities. The forex market will be central bank digital currencies versus central bank digital currencies. That's interesting to think about too. And the fiat crypto market will be Bitcoin over USDC, which is just a type of stable coin and the like. So this is just, it's very interesting to see what this take is. This is Balaji Srinivasan, I'm not sure if I said that right, investor, former chief technology officer of Coinbase, and general partner at A16Z. Not sure if I'm saying that right, but interesting nonetheless there. The next, we'll move right on to the DeFi matrix spurs competition and becomes a check on central banks. The DeFi matrix will be a check on the power of central bank digital currencies. Just as Google News made every local newspaper compete against every local newspaper, digital wallets will make every national digital currency compete against every other national digital currency and every other asset, public and private. So nations will only be able to mandate adoption within their borders, and even then, people may only retain the minimum balance of a surveillance currency. So they'll use digital wallets to select assets with programmability, privacy, possibility of upside, and predictable monetary policy over lockdown assets that promise none of these features. As such, we are entering an age of global monetary competition. Yeah, so I definitely see that as being a big possibility. Fiat crumbles. Within a decade, fiat currencies will be in severe decline. They're already in severe decline, brought on by their own self-immolation and hastened by the existence of sound market-based alternatives. It's already happening. Cash survives. I don't know. I don't necessarily agree with this. This guy, Brett Scott, author of The Heretic's Guide to Global Finance, Hacking the Future of Money. Might have to pick this up. He's saying cash survives. It's fashionable for futurists to predict the demise of physical cash. They're already doing away with it though. But he's saying the digital infrastructure are insecure in a world in which climate change is bringing ever more extreme weather events. The fact that cash doesn't crash means that it is far more resilient than digital money, and it will be around for a long time into the future. Digital is massively overrated. Interesting. And in a bit of contrarian spice, Scott also offers the next two. He also says crypto fails to challenge the monetary system. Crypto tokens like Bitcoin do not fundamentally challenge the monetary system, given that they depend on the monetary system to give them a price. But that price does enable them to be counter-traded, the process of swapping one thing for another via their monetary price. He's saying there is a new age of counter-trade emerging, but crypto enthusiasts keep mistaking it for a new age of money. But what he's not mentioning is that actually the crypto systems enable that crypto to be used for money. So it's not that, like, Bitcoin doesn't really serve a purpose. That's the thing. He's comparing all of crypto to Bitcoin. Bitcoin is just one crypto. It's slow, it's antiquated, proof of work, it's highly energy intensive, and it doesn't really do anything. People in general think Bitcoin, oh, this crypto, but it doesn't really do anything. It doesn't have underlying utility. It's really slow to use as money. To say and compare all of crypto to Bitcoin and saying that it's failing to challenge the monetary system is basically not really digging in and understanding crypto and the potential of what it is, and some of these systems already out now that are challenging the system and that are superior and that actually have utility and use case. Those are the cryptos that will survive, will be the ones that have use case, that are getting adopted, and so that value, like what do we assign fiat right now? What do we assign the monopoly money that our government is printing right now? How do we even assign that value? It doesn't really do anything. It's paper, right? But crypto already, the crypto that does and has value and challenges these systems, it can be used as money. It can be used as value. So I would disagree with this one. But he's also saying the new wave IOUs take off here. New wave IOU and rippling credit systems begin to take off. The crypto mainstream has perpetuated some pretty regressive ideas about money for the last 10 years by fixating on a commodity paradigm, but by far the most interesting new experiments in money involve finding new ways to create horizontal networks by promissory IOUs between people, just peer-to-peer stuff. The future of money is Bitcoin. This is Alex Gladstein, Chief Strategy Officer, Human Rights Foundation. everything becomes tokenized. This is Sandra Rose, CEO of Global Blockchain Business Council. I agree with this. The tokenization of everything is rapidly changing how we perceive money and wealth, spurring the creation of digital microeconomies. NFTs are the first killer app. The battle for the future of money is on, and my money is on Web 3.0 innovations, creating opportunities for many, not just a few. So I agree with that. I feel like with certain crypto blockchain companies, you're looking at the tokenization just makes it so much easier for ownership to be claimed. So if you have anything out there can be tokenized and put onto a blockchain. So which is really interesting because everything is going to be tokenized. It makes it so much easier to have all your assets on some type of consensus model where ownership is as simple as assigning tokens. Whoever owns that token, it can easily be validated and verified because the blockchain and the algorithm is open for everybody to see the blockchain or the hash graph. You can see every single transaction, how it was validated. And so tokenizing is just simply a way to even fractionalize certain assets. You can have real estate. You can tokenize real estate, meaning you, instead of just having like one owner of the house, let's say you wanted to have a particular house or a group of houses or a whole portfolio of hard real estate assets is now represented as a token. You can tokenize that, and now you can have 1,000 different tokens that the whole token as a whole or the whole portfolio as a whole is now tokenized. So, and that's just literally one example, which is, I definitely think that is where things are going. But cars, any asset that you have will be tokenized. Gold, there's already things, different hard precious metals can be tokenized. It'll be really interesting to see how that unfolds in the future. Programmable money puts the planet's resources to work. Money is just a representation of the world's assets, our energy, and our vision. The future of money is the future of how we put this planet's immense resources to work. Putting money on the blockchain, making it programmable, and enabling it to work with other services and assets are the keys to giving us choice and power to put our money to work. Whether it's investing in solar farms or paying attention for education, there are still many great projects that are not being done for lack of investment. With programmable blockchain-based money, we can take our own assets and put them to work for everyone's benefit. Companies ape into tokens. I believe every company in the world will have a token in its capital structure in the next 5 to 10 years. These tokens will be hybrid securities, part loyalty, part member rewards program, and part quasi-equity, and that the token will have a utility within a company's ecosystem, like rewards, and will also have financial value as the company grows revenues, pass through dividends. So this is basically saying you'll have stocks and equities, but there'll also be tokens where you own a certain amount of tokens for a certain store or brand, and that's going to give you rewards and perks that just normal people that don't have the tokens have. So it's like a way to help foster community, and it's a smart marketing move, and it makes you feel more part of that brand, more part of that culture. All consumer-facing businesses will benefit from engaging their customers with a token. They mentioned Starbucks, Delta Airlines, Netflix, Disney, to even small local companies like your barber, gym, and corner bodega. They also say big tech reigns supreme in this one. I don't know what they're talking about in this one. It's 2031, and over 6 billion people use BTAs in their daily transactions, which are digital currency issued by a group of 6 big tech firms known as the Six Sisters. So this is like some futurist stuff here from Marcelo Prates, CoinDesk columnist and a central bank lawyer. So I don't really know, I guess, what they're talking about in this one, but moving right along here, more barter through tokens. There will be a proliferation of new economies that will have their own form of barter. For example, tokens as a medium of exchange, such as in-game tokens like SLP, which is Smooth Love Potion, which is like the in-game currency for Axie Infinity, which is a crypto video game, and Ethereum. They will be accepted as a medium of exchange directly. Blockchain-enabled, easy-to-use applications to facilitate custody, trade for tokenized forms of money. and as a medium of exchange will fix itself over a basket of other currencies. That could be like ETH, Bitcoin, USD, the euro, sliding away from the single USD currency around that point in time. That's very interesting. Programmable. So this prediction from Dovey Wan, a founder of Primitive Crypto, says programmable fiat leads to confiscations. Now this I do agree with. Programmable fiat monetary policy and CBDC, central bank digital currency, will make arbitrary seizure and irrevocable confiscation within a few lines of code. So basically, if you disagree with what they're saying, or let's say you're even watching this video and the powers that be don't like what you're saying, they can cut your money off. They can cut you off. They can basically even geographically restrict where and how that money is spent. So just an interesting thing to think about. That's why DeFi is important. We can have the central bank system, we can have the centralized systems, but we can also have decentralized systems. It's a check and balance, checks and balances. We can have both. They can interact with each other. We can have the centralized systems where we pay our taxes and do all that government stuff. But we can also have the decentralized systems that give us power and keep our freedoms intact, which are important. Crypto spurs wealth redistribution. Mordor central banking system does not create wealth, only the perception of wealth. The great concentration of fiat wealth and great redistribution from fiat to crypto wealth are happening in parallel this decade. So they're just saying that certain people are getting even more wealthy with fiat and then putting that into crypto and massively multiplying their wealth. So that's what's happening right now, is that the wealth is being redistributed into the new financial system. So you've got to take advantage of this trend right now, because if you're just stuck in the fiat and you don't have these crypto assets, you will be behind. No joke, you will be behind. So I don't know if you're watching this, you're already ahead of the trend here. So kudos to you. We're still early in this space. Money no longer reflects human value. And these are just interesting to think about. That's not to say this will happen. It's just a possibility. Money no longer reflects human value. This is what I was talking about a little about earlier in the video. Today, it's often said that money has three primary functions: a store of value, a medium of exchange, and a unit of account. But more than that, money is often seen as a reflection of how much you are worth to this world and how much that coffee is worth to you. Money is value, but as I look around, I see concepts of money and value becoming less and less intertwined. And this is from Taylor Monahan, founder and CEO of MyCrypto. That's interesting. I mean, that's very basically saying money is how we perceive money is going to change. Like, what is money? How do we even? What is value? What value do we as an individual give to society? What do we do to contribute? I feel like the more you help make someone's life better or a group of people's lives better, value can mean a lot of different things. So, if you're helping society as a whole and you're making people's standards of living better, whether you're giving them some kind of access to information, data, you're helping them provide some better service, like you should. I mean, that's how you have more of a certain thing or a certain asset. That's how it is. If you provide more value, you have more. I mean, it's simple math to me. I don't know why people complicate it. Centralized services are connected by decentralized rails. Now, this is from Sam Bankman-Fried. He's the CEO of FTX. He was in front of Congress yesterday, or 2 days ago rather. They had a huge crypto hearing. He says, and this I definitely think this is an interesting analogy here. Let me paint a picture that might or might not come to pass. You have a bunch of centralized services and islands connected by decentralized blockchain rails. I think a lot of services are going to need to still be isolated and centralized because that's what is most computationally efficient. The more condensed the network is, the easier it is to operate. But the network as a whole could be largely decentralized. You can move between services, any service, easily on standardized blockchain rails. That's what Quant is doing, by the way, side plug, which would be extremely valuable. If there's an easy, standardized way in 30 seconds to move assets from one platform to another, that doesn't exist outside of crypto right now, and it's a huge hindrance. Quant solves that, by the way, the overledger. Payments could be effectively instant on blockchain rails. This is true of money, and that's true of assets as well. Assets get tokenized. payment apps and in-store objects support that, and that's probably happening largely over mobile. And I think it's important, or he says, I think that is something which would be in many ways more efficient and easy to scale and grow than the system we have today. I agree. We're already seeing that. So you can have different isolated centralized bank systems. Every country could have its own CBDC, but those central bank digital currencies have to be built on the top of certain blockchains. And those blockchains and infrastructures have to be connected through systems like Quant. We talked about that. They're ODAP compliant, right? Which is the Open Digital Asset Protocol. Had to think what that meant off the top of my head. But these are assets that are already compliant and up to those standards, that are up to the ISO 200.22 standard. So they can connect freely like this. So I think this is definitely the best of both worlds. You can have those centralized financial systems and you can be decentralized. Problem solved. Money gets weird. And my prediction for the future, according to Laura Shin, host of the Unchained podcast, is that money is going to get a lot weirder. It will be more closely tied to or allow a greater expression of our identities and our individuality. It will reflect our relationships in both the physical and digital worlds, and it's going to accelerate globalization and bringing together people with similar values across borders and tying them together with financial incentives and an identity that is intensified and deepened with financial value involved. And all that is going to shake up the traditional world of governments, different legal jurisdictions, and different local currencies. That is interesting. That's a lot. Most of that, or some of that, I would agree with as a whole, but just different perspectives. I want to know, though, what do you think? What are your thoughts? What of these do you feel like is correct, is gonna be around? Will cash survive? Will fiat crumble? Let me know. I'm just sharing my thoughts. I found it interesting, but I don't know what you think. So comment below. Let me know what you're thinking about this. Are you getting in crypto? What crypto are you investing in? Let's chat in the comments. I try to read and respond to everyone. And if you watch this video and you haven't subscribed, why not subscribe right now? Just hit the button, hit the like button, help me out. I'm growing, I'm pushing these videos out to reach more people, just to help, just common sense crypto right here. All right, we'll see you on the next one.